Hello and welcome back to my channel. Today we'll be discussing about NISM Series 7 Chapter 2. This chapter is focused on the market participants and the regulators in the market structure. The most important participants of the securities markets are the investors, the issuers, the intermediaries, and the regulators. The investor is known as the backbone of the securities market. Investors can be broadly classified into retail individual investors, institutional investors, and non-institutional investors. A retail individual investor means an individual investor who does not bid for a value of more than 2 lakhs. Institutional investors comprise of domestic financial institutions, banks, insurance companies, and foreign portfolio investors. Non-institutional investors are any investor other than retail individual investor, such as family offices, corporates, partnership firms, etc. There is another type of investor which is known as accredited investors. Basically, these are highly qualified investors who make informed decisions while making any investment. Market makers. Market makers provide liquidity in the financial market. They operate under the guidelines provided by SEBI. Market making has been made mandatory in small and medium enterprise exchanges. The main responsibility of the market maker is to provide two-way buy as well sell quotes on a continuous basis. Issuers are participants in the market who need to raise funds. In the domestic market, issuer can raise funds through financial securities like equity shares, preference shares, debentures, and bonds. Indian companies can also raise funds from international capital markets through global depository receipts, American depository receipts, foreign currency bonds, and external commercial borrowings. GDRs are a negotiable financial instrument issued by a foreign depository bank other than US. An American depository receipt is a negotiable certificate issued by a US depository bank representing a specified number of shares of a foreign company's stock. Foreign currency convertible bonds. These are bonds which are issued by the Indian companies and subscribed to by a non-resident in a foreign currency. External commercial borrowing or ECB are commercial loans which are availed from any internationally recognized source such as bank, export credit agencies, etc. Masala bonds are rupee dominated bonds issued outside India by Indian entities. These are debt instruments. All the issuers are regulated under SEBI Issue of Capital and Disclosure Requirements Regulations Act 2018 and SEBI Listing Obligations and Disclosure Requirements Regulations Act 2015. The stock exchanges provide a trading platform where buyers and sellers can meet to transact in securities. Some typical functions of the stock exchanges are to provide a trading platform, provide investor education, awareness and protection, surveillance and investigation of securities, listing of securities and monitoring compliances of listed companies. For all these activities, the stock exchange is held responsible. Clearing corporation. A clearing corporation is an entity that undertakes the activity of clearing and settlement of trades of any securities. It usually includes a clearing house. A clearing corporation performs three main tasks: clearing and settlement of all transactions and carrying out the risk management. A clearing corporation provides financial guarantee for all transactions executed on the exchange. This process is called novation. Pay-in is a process where a clearing member and custodian bring in money or securities to the clearing house or corporation. This forms the first phase of settlement activity. Payout is a process where clearing house or corporation pays money or delivers security to the clearing member or custodian. This is the second phase of the settlement activity. Depository. A depository is a participant which facilitates holding securities in electronic form and enables transfer of securities by book entry. The main objective of the depository is to provide maintenance of ownership through electronic book entry, resulting in a paperless trading. There are two depositories in India: Central Depository Services Limited and National Securities Depository Limited, which are also known as CDSL and NSDL, and these were established under the Depositories Act 1996. The depository provides its services to its clients through depository participants. These agents are appointed with the approval of SEBI. Banks, financial institutions, NBFCs, clearing corporations, registrar and transfer agents, custodian of securities, state financial corporation, and SEBI registered trading members can become depository participants. Trading member or clearing member. A trading member is allowed to execute trades on his own account as well as on account of his clients. A trading member can be an individual, a partnership firm, a limited liability partnership, corporate or bank who is a member of stock exchange. A clearing member is a member who has clearing and settlement rights in a clearing corporation. Clearing member can help in clearing of trades of their clients. In India, investors cannot access the exchange platform directly, therefore, they have to trade through registered stockbrokers or trading members of the exchanges. Only trading member. These members are allowed to execute trades on their own, but they do not have clearing and settlement rights. Trading comes self-clearing member. They have trading as well as clearing rights. They clear and settle trades executed by them only, either on their own account or on account of their clients. Trading member come clearing member. They have trading as well as clearing rights. They clear and settle their own trades as well as trades of other trading members and custodial participants. Trading member come clearing member. They have trading as well as clearing rights. They clear and settle their own trades as well as trades of other trading members. Professional clearing member. They have only clearing rights and they do not have trading rights. They clear and settle trades executed by trading members and custodian participants. Custodians are any person or entity who carry on or propose to carry on the business of providing custodial service. Custodians are also clearing members, but they are not trading members. They settle trades on behalf of the clients of the trading members when a particular trade is assigned to them for settlement. They only perform these tasks when they have been assigned to them. The custodian is required to confirm whether he is going to settle that trade or not. Regulators. SEBI regulates the securities market and the commodity derivatives market. Reserve Bank of India regulates the banking sector. Insurance Regulatory and Development Authority of India, IRDAI, regulates the insurance sector. Pension Fund Regulatory and Development Authority, PFRDA, regulates the pension fund sector. International Financial Services Security, IFCA, is an authority for development and regulation of financial products, financial services, and financial institutions in the IFSC in India. We also have Ministry of Finance and Ministry of Corporate Affairs acting as a regulator in financial affairs. The role of SEBI as a regulator. The role of SEBI is to protect the interest of the investors in the securities market, promoting and development of the securities market, regulating the business in stock exchanges and other securities markets, registering and regulating the working of stockbrokers, authorized persons, etc., promoting and regulating self-regulatory organizations. Some of the acts which help in the regulatory framework of the securities market are the SEBI Act 1992, the SCRA Act, which is related to the securities, 1956, the Depository Acts, which is related to the depository participants, 1996, and the Companies Act 2013, which looks after the listed companies in the market. With that, we come to an end to this video. If you like my content, please do not forget to subscribe. Thank you and see you in the next one.